Shark Tank appears to be just another TV show. But whether it's Shark Tank USA or Shark Tank India, what looks like entertainment is actually a live experiment in how the future gets funded. Across 15 plus seasons, Shark Tank USA has closed 800 plus on-screen deals, with sharks investing well over $200 million backing companies that later crossed $1 billion in sales. Meanwhile, in India, Shark Tank has invested around 128 crore rupees across 176 startups so far. That's massive capital. But in India, most capital flows into food, lifestyle and quick-win consumer brands. While in the US, sharks are backing AI, automation and software built to scale globally. Which brings us to the real question. Are investors funding businesses that grow fast or ones that grow far? Because writing a check is easy, creating a billion-dollar outcome is not. So, let's stop counting crores and dollars and ask which Shark Tank is really investing in the future. Let's start with the US. Because when Shark Tank USA comes into action, it doesn't just create viral moments, it creates billion-dollar companies. Just like Bot AI, an AI platform that lets users build custom bots without coding. The founders asked for a modest check, but inside the tank, Mark Cuban and Michael Rubin saw the future far bigger than the pitch. So they offered $300,000 for 30% equity. That deal became one of the most significant investments in US Shark Tank history. The next one is Psionic, founded by Adil Akhtar, which builds AI-powered bionic hands designed to restore real-world functions to amputees. When Psionic entered Shark Tank USA, you could feel the shift. Laurie Greiner, Daymond John and Kevin O'Leary teamed up and offered $1 million for just 6% equity and became one of the largest tech-focused deals in US Shark Tank history. And that's the pattern in the US. Sharks don't wait for finished products. They fund futures. They saw the vision, they saw the scale, and they moved early. Now let's cross the ocean. Because when you look closely at Shark Tank India, you start to see a very specific investment pattern emerge. The clearest example came in season 4. Noor didn't walk into the tank for mentorship. It walked in for capital and walked out losing control. Peyush Bansal offered 5 crore rupees for 51% equity. Not a partnership, a takeover framed as a pitch. This became the largest deal in Shark Tank India's history. And it quietly redefined how capital works in the Indian tank. But then there's the deal that breaks the myth that bigger checks create bigger wins. Aman Gupta once invested just 12 lakh rupees in a simple healthy snack brand called Let's Try. As the company scaled, its valuation climbed to 40 crore rupees, a 333 times return. It came from trusting fundamentals in a crowded market. Then came Skippy Ice Pops, the deal that turned simplicity into scale. A seasonal product, no deep tech, yet all 5 sharks invested 1.2 crore rupees for 15% equity. This wasn't a bet on disruption, it was a bet on distribution. And this is where the constant becomes impossible to ignore. Shark Tank India is structured around certainty. Shark Tank US is structured around possibility. In the American tank, capital often comes in early and with fewer conditions. Founders are given room to experiment, to pivot, and sometimes to fail before they scale. So when you look at both tanks side by side, the question isn't who invested more, it's who invested earlier, when the upside was still invisible. One version of Shark Tank turns capital into certainty. The other turns uncertainty into growth. Both build companies, but only one consistently backs ideas that can outgrow the room. And that brings us to the question we started with. Which Shark Tank is really investing in the future? Because the future doesn't reward safety. It rewards belief placed early and left free to run. And if this video changed how you look at Shark Tank, Here's something most people miss. Watching deals is easy. Understanding why some investments compound for decades is not. That's exactly what we break down inside Exit Funds Learn How to Invest course. Not theory, not buzzwords, but how real investors actually make decisions. Check out the link in the description box. And if you found value in this breakdown, like this video, share it and subscribe to Exit Fund for more deep dives on startups, capital, and real-world investing.